Hey guys, today I will teach you about a trend. So firstly, what is trend? Trend is about one currency becoming more dominant than the other. So what do we mean by more dominant? For example, if you take Euro USD, it's a pair of the Euro pound and the USD dollar. So in this case, if Euro is if USD is in a bearish momentum or USD is weak, if USD is weak, the Euro USD market will gonna go in a bullish momentum or to the upward. It will be more stronger. But if USD, the dollar is stronger, the Euro pound will be the weaker. So it will be in a downside. That means it will be in a bearish momentum. So here, these are the two types of trends. In this case, this is a bullish momentum, and then this is a bearish momentum. So in this case, the market is taking higher highs. In this case, the market is taking lower lows. So types of trends. When we came to types of trend, there are two types of trend: the bullish trend and then the bearish trend. In the case of bullish trend, the trend occurs when the market is moving upward. That means the higher highs are taken. So firstly, in order to distinguish whether the market is bullish trend or a bearish trend, you should to look about which liquidity level is taken, the higher highs or the lower lows. So after identifying the higher highs and the lower lows, you will look which one the market is in favor to take. Like if you take the high highs, the market is in a bullish momentum or in a bullish trend. So in this case, the buyers are in control. Yeah, the buyers are more stronger than the sellers. So how do bullish trends happen? When we ask this question, the first thing you should to think about is a strong economic growth, high interest rate, and political stability. So, and some other reasons. So, these reasons are the 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 causes of the bullish trend. So, as you see here, this is the higher high, and then here this is the lower low. So, which one is taken? The higher. So, after the higher high is taken, you will notice that the market is in a bullish momentum. So, you will look for zones like order blocks, breaker blocks, fair value gaps, or liquidity levels. So, such type of zones are the most important ones. So we will discuss in the next videos, in the next part. So for today we will talk about this trends. So here, after the market took this higher high, the market goes and return back to such some point, like a point of interest like order blocks and some other zones, and then it continues its direction to the upward. So what do we call such type of trends? A bullish trend. So in this case, you will look for buy, because as I told you, the buyers are in control. So then the other type of trend is the bearish trend. So in this case, this is the opposite of the bullish trend. So in this case, the market goes in a downward. As you see here, the market respects order blocks and fair value gaps in order to go to the downside. So in this case, which one is taken? The lower low. So here, these lower lows are taken. So this indicated the market is in a bearish trend or in a seller's control. Sellers are in control. So in this case, you will look for sales. So if you look like buys, in this case, you will get hunted. So you will lose your money. So you will get manipulated. So the first thing in the market, you should to know your trend. So this trend is your bias. So if you get your trend, if you look for your bias, and if you get in which direction the market is going, you can be profitable. So the causes of this bearish trend are high inflations, like high interest cuts, like by the banks and the banks and the geopolitical risks. So these would be the causes for the bearish trend. So in this case, the sellers are in control. So if you take a buy in this case, you will lose your money. So these are the requirements. So the requirements for bearish trend are which one is the market in favor to take, the lower lows or the higher highs? So in this case, you will distinguish that the market is in a bearish or in a bullish momentum, like by knowing which one is taken, the lower lows or the higher highs. So in this case, the lower lows are taken. So this in the next video we will discuss about a trend reversal. So it's somehow hard than the bearish and the bullish, like blah blah blah. But in the next video we will talk about the trend reversal. Okay, here, as you see here, as I told you before, the first thing and the first requirement before entering a trade or before identifying whether the market is in a bullish momentum or a bearish momentum, the first thing you see is that if the market is taking higher highs or lower lows. So as I told you before, if it takes higher highs, the market is in a bullish momentum, but if it takes lower lows, it's in a bearish momentum. So let's see this market structure here in a gold market. Like here, as you see here, the market is taking higher highs. So the first thing, let me show you something. Yeah. So in this leg and this structure, in this structure, which one is the higher high? The higher high is this, and then the lower low, and then the lower low is this one. So the market took the higher high. So this indicated that the market is going in a upwards. That means the market is in a bullish momentum. So after the market took this low, as I told you before, the market will fetch for some zones like order blocks, fair value gaps, or liquidity levels, or breaker blocks. But I will discuss this detailedly in next videos. So after that, you can enter from this zone. So look how the market goes. Look. So in this leg, in this structure, which one is the higher high and the lower low? In this leg, which one is the higher high and the lower low? The higher high is this, and then the lower low will be in this downward. So which one is taken? The higher high. So the market is in a bullish momentum. And then let's look another one. This higher high is also taken. So the market took this higher high rather than taking the lower lows. So the market took the higher highs. So the market is in a bullish momentum. As you see, the market is in a bullish momentum. So when we summarize it, the first thing you will look is whether the market is taking higher highs or lower lows, and then after that you will look for entry zones like order blocks, breaker blocks, fair value gaps, or liquidity levels. After that you can enter from that level. Okay, let's see examples of the bearish trend. So like in the gold market, so it's this structure is in a Ferrari 16, and then let's see how the market goes. So here, as you see here in this league, which one is the higher high and then the lower low? So as you see here, this is the higher high, this is the higher high, and also this is the lower low. So which one is taken? The lower low. So the market is in the downside. So after the market took this lower low, we recognize that the market is in a bearish momentum. So in the previous I told you that in order to distinguish the trend, you should to look whether the market took the higher highs or the lower lows. So if it takes the lower lows, it's in a bearish trend. So after the market took this low, it hits this order block, and then it goes down to the another lower low, as you see here. So in this leg, which one is the higher high and then the lower low? This is the higher high. And then this is the lower low. So again, the market took the lower low. So this indicates that the market is in a bearish momentum. And also after the market took this lower low, the market hits this order block zone and then it returns back to the down side as you see here. So here the market also took this lower low. So this indicated that the market is in a what? In a bearish momentum. So yeah, this is the whole thing about this video. So in the next video I will teach you about trend reversal. So today I show you that how to trade in a trend. But in the next video I will show you how to take a trade using a reversal trend. So subscribe and like.